Hi everyone, this is Dr. Chhoda and welcome to this important episode of Ignition Time. Folks, I've been seeing a lot of the mania in the stock market about the GameStop situation, about the AMC situation, about cryptocurrency. And I know there's a strong tendency to try and get in on the action and to try and make money quickly and to try and time the market. Folks, I can tell you that in the short term, the stock market is a voting machine. In other words, gosh, you don't know what's going to happen. Things can swing one way or another. But in the long term, Warren Buffett says that the stock market is a weighing machine. What that means is in the long term, stocks that either have high potential, like the Teslas of the world, or stocks that make a lot of money, like the Amazons, the Netflix of the world, they are the ones that start to generate more cash flow and they are the ones that are valued richly by investors. As you can see, GameStop has come crashing down, AMC is coming crashing down. So I want to give my viewers and subscribers a general idea of how to invest in a post pandemic world. So let me be very clear. When you're buying and selling stocks, I know there are a lot of trading platforms out there that offer $0 trades. If they offer $0 trades, they have to make their money from you somehow. Because keep in mind that every time you're logged into an application, the actual brokerage, whether it's Robinhood, whether it's Merrill Edge, whether it's Fidelity, it could be Webull, it could be anything. They all have a cost. So they actually make money off of your data and they make money when you pay margin. So when you buy a stock on margin, you pay 7%, 8%, 9%. Think about this for a second. Let's say you had $10,000 worth of margin. Okay, again, $10,000 worth of margin, and then you were paying 8% a year on that money. 8% of $10,000 is $800. So check it out right here. $10,000 on margin, if you pay 8%, which by the way is conservative, some of them are even more, then you're paying $800 a year in margin. So folks, if you take the $800 and divide that by 12 in this example, you'll get $66 a month. This is just a ballpark. Some of us are essentially buying more stocks on margin, essentially leveraging ourselves. Now, here's the interesting thing. When you're doing some business with a brokerage that is a zero fee brokerage, they have to make money from you somehow. Otherwise, they're not going to be able to stay in business. This could mean that their customer support could get compromised. This means their systems could get compromised. Their systems could shut down. This means that they could face liquidity issues. This also means that sometimes the CEOs of certain companies are not even licensed and are not even registered properly as they should be. And I want our viewers and subscribers to be aware about that. And speaking of licensing, folks, here's a headline on your screen that was published on CNN. Robinhood CEO is not licensed by a Wall Street regulator. Robinhood CEO Lard Tenev is not licensed by the FINRA, which is a powerful regulator on Wall Street, even though presides over one of the biggest online brokerages in the country. So what I'm trying to say is that when you have a company, and this isn't just specific to Robinhood, when you have somebody providing $0 trades, they have to make their money off of you, and they do it in some way, in many cases without you even knowing it, whether it's got something to do with your data, whether it has something to do with the way your money is leveraged in their system, whether it's the margin rates that they charge. They have to cut corners somewhere. They're not going to be able to, any company is not going to be able to provide 24/7 customer support unless it has other sources of revenue. On the other hand, let's say you were to use a brokerage that charges you 1% or 1.5% margin rate. So let's say now you borrow $10,000. 1.5% on $10,000 is $150 a year, which means right around maybe about $15 a month. Now, one of the reasons you come to the Ignition Time channel is because of very, very, very important math. $15 a month is less than $66 a month. And if you can borrow money at 1.5%, so what if you have to pay $5, $10 a month as a maintenance fee? So what if you have to pay a few bucks a month as as some sort of a transaction fee? Folks, try and look at the big picture. The free trading is it's very appealing. It's very interesting. It makes you feel, oh, I bought the stock. But at the end of the day, when you can, if your broker allows you to buy and sell stocks, doesn't restrict you, allows you to do margins, allows you to borrow money at low interest rates, allows you to do all sorts of things that other brokers won't let you do, then in the end, that allows you to make more money. I would encourage my viewers and subscribers to approach trading and investing in a new way. So, A, with the selection of the right broker, and B, with the selection of the right strategy. I'm going to provide you with a link to my recommended broker in the description section below, so you can definitely check it out and then sign up with my preferred broker. And I will provide you, and as far as the strategy is concerned, my recommendation would be to have a strategy where you make between 30% to 50% a year on your money. Many stocks, if you make the selection correctly and if you buy at the right price, you can make 20-25% a year in returns, and then you can make an extra 20-25% using options trading, using covered calls, and bull put spreads and other strategies like that. So my recommendation to our viewers and subscribers would be, please don't get swept up by the hype of trying to make a quick buck. Don't fall victim to larger companies that want to take your data, that make you the product. The product should be the brokerage that you're using, and their business model needs to be one that is consistent with your long-term goals. I can tell you, for me, I don't use brokerages that are $0. I actually pay a small fee whenever I buy and sell stocks, because I work with a broker that gives me the lowest margin rates in the industry. I work with a broker where I'm actually able to borrow hundreds of thousands of dollars at 1.5%, and then I'm able to make 40-50% return on that money. In case you haven't noticed, I'm making money with someone else's money, and that has been one of the reasons for my financial success and my financial growth. When you borrow money on margin, which is a hidden cost that not many people pay attention to, I want you to ask yourself, what are you paying your broker? Chances are you'll be paying upwards of 7, 8, 9% to your broker, and it's going to be quite a shock. And when you add those expenses, you will find that it's actually cheaper to work with a broker who maybe charges a couple bucks whenever you do a trade, who provides you with other benefits such as access to lower margin money, which will be more beneficial for your long-term financial future. If you have $5,000, $10,000, $20,000 set aside, that's okay. That's a good starting point. But you want to make sure that you're working with a company that gives you low margin rates and that simply doesn't give you free trades and then charges you higher margin rates. That would be my recommendation. And folks, in terms of trading strategies, I am a buy and hold investor. My biggest holding is Apple. My second biggest holding is Bank of America. My third holding is Virgin Galactic. I buy these shares and I hold for the long term. I buy tens of thousands of shares. And so what I do is then I sell options against those shares. So I sell what are called as covered calls. So essentially I get paid for the obligation to sell a stock at a higher price than what I bought it in the near future. Think about that. I get paid to sell a stock at a higher price than what I paid for it at some point in the future. That is called covered calls trading with options trading. I never sell options for stocks that I don't own, because I just don't want to get caught in a situation where I now have to fulfill my obligation by buying a stock in the open market. And a lot of this has to do with the fact that I carefully research and I buy stocks at the price that I want to buy it at. So folks, that is my vision for you in a post-pandemic world. Number one, do your research as far as a broker is concerned. Choose the right broker. Number two, have the right strategy. A strategy where you try to double your money, you make quick money, sounds exciting, but it usually ends in tears. I hope this was beneficial. I have big visions, big goals for you guys on my channel. Thank you so much for watching. If this helped, please click the like button, please subscribe, please enable notifications. That would really help me. That sets up a confetti-like atmosphere that makes me super happy. Folks, I want to be clear. Wealth takes a lot of time to build. It's not like it's raining money. Folks, that happens in fairy tales. I want to be clear. I didn't take the elevator to the top. Okay, folks, I took the stairs, and I'm giving you the benefits of my experience, my years of experience, my years of failure, so you can essentially make that leap forward without having to take the stairs and fall down the stairs several times like I did. Thank you so much for watching. Please click like, please subscribe, please enable notifications. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.